Good day, everybody. Brian here from quantlabsnet.com. Just wanted to put up a series of topics in this one video, all to do with not just jobs, but if you're applying for banking jobs, automation, trading jobs, anything. I want to state what the reality dictates now. So today's July 24th. This article that came out at the end of last year in January 30th, 2024, fintech boss received 20,000 applications for 5 jobs. Okay, so this is Data Bento, uh, and I've talked about them before, but this is how serious we're getting, and that was a year and a half ago. So you can imagine as AI is kicking in high gear now, the amount of job losses are coming in, 9,000 people losing jobs at Microsoft alone, and just I don't know. I've heard 25% of the staffing at Amazon's getting let go as well. I don't know, but AI is doing something very negative. So if you're looking for a job in hedge funds or banking, it's beyond competitive. It's insane. So in order to survive and thrive in this field, and I've talked about how managing port, uh, portfolio managers at a bank like Goldman Sachs are bringing in multi-million dollar packages. A lot of it has to do with is first their trading experience is probably decades in the making. Also, most likely they are trading in this asset class called um, uh, futures and options. To me, and I've talked to dozens of people about it. London Quant, same thing. Options market, multi million dollar, uh, just in a very short period of time. It's the most lucrative asset class out there, and probably the most lucrative anyway to make money. So a couple of months ago, I created this course, knowing that as the foundation, knowing when the markets go bad, um, you can diversify yourself among 50 plus assets just alone on the CME, the Chicago Mercantile Exchange. Plus, there's a couple other big exchanges as well. So futures and options is the way to go. And I'm going to talk about this course because why I put it together and why if you want to stay in this field, everything's all about your track record. You have to prove that you're making profit consistently, no matter where you are. If you're on your own or through a job, track record's everything. I've gone through, experts in math, experts in computer science seem to think that those are the great skills to have to make money in these type of jobs. They are absolutely bollocks, as the British would say. It's your track record, especially now when you have 20,000 applications for 5 jobs. I would not be surprised there's 20,000 applications now per job. But even if you factor in 4,000 applications just for one job, that's nothing. I mean, that's nothing. I think it's a lot worse as AI comes in and it's taken out a lot of banks, jobs. So you really only have one solution, is to trade on your own, be self-employed in this field. This is now we're at a point where it's very critical to know this. Again, I've created this course for that. So it's a 26-day course, okay, and it's drip fed every day for 26 days. There is some sampling of coding of Python and maybe a little bit of C++, but I do that and I do that in another more advanced membership. Okay. But here, this will lay down the foundation and it gets very serious here. Um, so right here, there's a lot of things you need to know about this field. Okay. Um, if I was to show you what's in this course, it would blow your mind on how sophisticated it is. Okay. It's not meant to be an easy uh, walk in the park. Okay. Um, so essentially, let me go to another browser here and just show you uh, what you're getting here. Okay. Let me just get rid of all this stuff. Ugh. All right. All right. So if you come in here, okay. Now this is a standalone course now. I'm listing it for $100. Okay. So that's the price. And to get this, just come into courses now, and it's very simple. You come under the advanced options with source code, okay, and you'll see this description I'm about to tell you. So as I said, it's drip fed for 26 days, okay. Everything's in steps. So it's an in-depth analysis of futures and option markets, okay. It's very advanced. It'll cover from the ground up all the different strategies and techniques from this. When you see, if ever you see my simulations and the type of strategies, you'll learn about them in this course. Okay. There's also, as a trader, very foundational to understand about risk management and how to mitigate potential losses. No one talks about that. You get some source code examples to help you make those optimal trading decisions. And these are real world. Okay. So again, the target audience is for people who want to take their trading seriously. I'd also highlight that as we move into a much more competitive job market, if let alone there will be a job market because of AI, um, you know, you're going to be forced in a corner to get out there and start making money. People go out and basically bet on crypto. I've got nothing against crypto, but it's too unpredictable, too volatile. We all know about where potentially the equity markets will go, especially the stocks. Big correction coming. We don't know. But as I said, you can circumvent that with learning all of this stuff. Okay. So uh, that's the general synopsis. But if I come back in here, I want you to just see how vast this is. Okay. So each step, okay, will walk you through. It will give you the introduction and the overview. Um, there's also a course outline for the futures market history, which can be important, and just understanding the basic market mechanics. Um, learn about future contracts, learn about options contracts and market history, how to read the futures contract pricing quotes that you get electronically on a lot of websites, the function and future and option market and the mechanics. We've got here, then we cover into all the different types of futures. Again, just so you know, you have the full contract, which can be enormous and 100,000 plus. That's where you need your big boy pants to do that. Like we're talking 100,000, 200,000, probably 500,000 kind of trading accounts. On top of that, you have the minis, which is more probably 20, 25,000 account size. You only enter in those markets when you get really good and you're consistent. The other option is when you start out, which is probably more predictable because of the option chain data that you get and have access to, which goes out, as I said, go out as far as a year and a half. Those are actual institutions making trades and willing to basically make bets going a year and a half out. So you have so much forward looking data and you can make so many really good predictions from that, which is really important. So to do that from a starter perspective or from a beginner with low risk, with virtually very low capital, maybe a few thousand, you enter into the micro market where you trade the micros. Okay, you're kind of like coming in from a beggar's perspective, so you're going to have a subset of micro contracts to choose from, but they're the most volatile and the most profitable. Sorry, not the most volatile, the most liquid, highest volume. So you're going to be able to trade like a pro, be able to trade in a relatively liquid market. Okay. And yeah, you can trade Bitcoin and Ethereum in these markets. If they perform, then do it. You can also add in over time for the historical XRP and Solana as well. So you can do the big crypto as well. Um, so continuing along here, so there's different types of markets you can trade in. So you could trade in the treasury and bond market. You can use, a lot of people ask about arbitrage. This is the place to do it with the intemporal commodity pricing. This is all fundamental analysis and how it affects the market. It basically comes down to supply and demand. And again, There's the pricing theory, okay? Because understanding the theory behind it will give you major leg up. All the advanced stuff that I can do with AI encoded up in C++, Python, it's all 90% of those questions are going to be based around options. Options on what the institution and the pros are trading, and you can somewhat trade them through the micro market. So to be truthfully quant, you can still do it in these markets, but in the micros as well. So as I said again, there's the foreign currency. So if you're coming in from a retail forex world, a lot of brokers are corrupt. We know that. Here, it's highly regulated. It's nothing but regulated up there, yin yang. Okay. So when you're trading the big six currencies, you can do that through these markets, be it British pound, euro, Japanese yen, obviously US dollar, euro, and the like. Um, so a lot of it, as I said, comes down to knowing and fully understanding about supply and demand. These are going to be very tradable markets no matter what happens to the economies, because you could trade things like agriculture based upon supply and demand techniques. Okay, this is why this is probably the best place to be. Again, you can trade in financial markets. I've talked about bonds. I've talked about currencies. So there's other types of markets as well. There's Eurodollar to understand the relationship of U.S. dollars held in euro markets, understanding that important relationship with the U.S. dollar, because the U.S. dollar still, probably for a while, will be the central reserve currency. To understand that from a fundamental and more importantly, an institutional level as well. Um, Future price forecasting. This is the critical point, because that's why they're called futures, because you could forecast in the future on based upon sets of data that you can see using also option chain data. Okay. So a lot of people talk about things like the technical market or the technical analysis. To be truthful, if anybody's saying that they can predict the future using technical analysis, is absolutely either making money, yes, but they represent maybe 5 to 10% of all the technical analysis out there making good money. Okay, that's it. Everybody else is either losing money overall, or they're making money and giving it back, and they're really not profiting and really not making any form of real profit over the long run. So as a result, the technical that I do, and the future using futures, the technical analysis is only used for timing positions. That's it. Uh, Technical analysis does not give you these are your best assets to trade or instruments to trade and forecast off that. It's just when you look at Bitcoin when they go into the random walk or these winters, uh, yeah, how do you technically trade that? And if you can't, it's usually mean reverting. And the only way to really successfully do that is using the automation. So again, we look at the further review of technical analysis. So in here, this is a typical step. Well, I call them steps. So I'm just going to get some PDFs here. There's different video presentations as well, and they go through some notes here as well, and some further more professional resources to look at to understand this particular topic, technical analysis. Okay, so I got two steps there for technical analysis. So this is where the institutional level stuff comes in. I've been asked, what does institutional level trading mean? What why would I do that? Because here you can trade like a professional. Okay, if you're going to do this for a job, that gives you the ability to put yourself pretty close to front of the line ahead of these 20,000 applicants and say, hey, not only do I automatically do automation in my trading, I also use quantitative techniques. Here they are. But more importantly, I'm a trader. I'm a successful trader. And here's my third party verified track record. That's how you get attention in this highly competitive job market. Okay. So it all starts with hedging. Okay. And I go through it again. I've got videos on that. And then what happens is it continues another step. And then what hedging does enables you to understand risk properly and be able to focus on returns, diversify, and basically build out and lead you into options on futures. Now, when I say options here, we're not talking about stock options. We're talking about non-equities options. So there's no options on stock. It's all about commodities, treasury, agriculture, financials, blah blah blah, and metals and all that fun stuff. Okay, in agriculture and what they call softs and all that. So that's the beautiful thing about options. Okay, so then I continue with a variety of different examples. Then there's a concept of options and comparing, because you can build out different strategies built combining futures and options. And that's what a lot of the big institutions do, the multi-billion and probably multi-million dollar institutions do as well. Because there's lots of choices to trade options. Not, you know what I mean. So here's basically the option pricing to learn fundamental things like I've talked about before, put call parity, and this is what the truthfully what a lot of high frequency trading shops focus on is called put call parity. Then that leads you into all the different arbitrage opportunities if the market conditions allow. Okay. Um, so then we get into everybody knows about Black-Scholes for option pricing and really understanding the importance of volatility. This right here with the Black-Scholes is the start of the quant, the math, and there's so many derivatives that come out of that on top of other quant math methodologies. And now we're taking it with this, putting it on steroids and basically using AI to make it more sophisticated. But this is why understanding this stuff is so important because this is the foundation of the trading markets. Okay. And when I ask people, how do you quantify this or quantify that? They can't because they don't understand the markets. And if I'm doing that from a job interview perspective, I'll gladly move on to the next person who will figure it out. And unfortunately, I'd say maybe 1-2% know how to quantify the markets and why and where the markets are moving the way they do. And a lot of it has to do with the things that I'm talking about here, and specifically on the Black-Scholes. So here we have things like the delta effect, and then we get into the Greek. We can also do hedging with the options, uh, and then option trading examples, and then that's the end of the course. So that's a uh, general way of how it works. This course should be a lot more, uh, much higher price once I get my live trading underway, which I'm doing next big steps, and then verified trading. Once we get to a consistent profitable, the prices here will just skyrocket because of the value that I'm adding and now credibility, hopefully, through the verified trading. And that is how you build your track record. And again, as I said, that's how you get the attention of recruiters. Because if you can't quantify your trading and why and where it's going to go, the firms are going to move on to the people that will know about this stuff. Doesn't matter if you have a PhD, doesn't matter if you're a computer science whiz or a math whiz, more and more firms are going to be wanting to focus on trading experience. And always remember, as more and more people get laid off, there's going to be more and more senior traders, probably in their late 30s, 40s, and 50s, that 20 somethings are going to have to compete against. And it's those traders with that kind of experience of 10, 20 years will be ahead of the game and ahead of the lineup, even for junior positions, because there's fewer and fewer of them because of, again, of what AI. If you want to know more about this, I'd strongly visit my site, quantlabsnet.com, and more importantly, get your name on this on my email list. Don't release anybody's information and get yourself the C++ high frequency trading ebook on trading infrastructure for a lot of these firms. Thanks for watching. Have yourselves a good day and over and out.